Hello, everyone. Time for another live trading session. Today is September 28th, Thursday, and we're going to start by taking a look at our metrics, and then we'll go from there. It was a very interesting week. We had some ups and downs, and we're going to talk about them and see if we can put on any new trades. So to start off, we'll see that our net lick is down a little bit. And this is not our 1-2-1s. This is mostly because I was trying to some trades with gold and bonds and silver, and I got quickly punished for that, and I got out of that with some loss, and I'll go over that. I'll show you what I did and what happened there. But overall, we took a little loss there. Let me just show you if I go to activity and year to date. And this was in bonds. We've got silver and we got some gold here. So 757, 580, and then just a little bit positive on the silver. And that was let's say 500, and so 12 around 1300 loss on those. And I think we're going to stick with our 1-2-1s. This was just a little, we were trying something out, but I think we're just going to concentrate on our 1-to-1 trading system. And we're going to go a little bit more into detail about some hedges, because as the market goes down, a lot of people are asking, hey, what do you do if the market goes down and things like that? So we'll talk about some hedges and some protection as well. And but so if we didn't lose the 1300 there, this number here would be closer to 50,000. So that would be, we would be just a tad under. But it is what it is. We're going to record it as is, as it was part of our trading account. And let's continue with the numbers here. So today 28,923, and the Wix is at 1734. Delta theta, delta 5732, and our buying power, and we go right here. And the only thing we are concerned with is the MES. Now keep in mind here, this includes as well a couple of ES strikes here. Those are part of the little hedge that we'll talk about, hedge on demand. And including that, our buying power requirement is 18.8%, and that one goes right here, 18.8. Now, I have a couple of new columns here in the spreadsheet, and those are for the hedges, because what we want to do is we want to be able to separate the metrics for hedges from our regular account metrics. And this is because the hedges are just a temporary thing, and we don't want to be in a position where we remove the hedges that all of a sudden our metrics are out of whack. So we keep them here, and I'll show you. So these here on the blue, these are the metrics as they are. But if we take these here, and let's take a look at those. So first, what we'll do, we'll take these ES. So this is a hedge, and if we were to close this position, you will see quickly here that we would be hit with 1835 in buying power reduction, right? 1835. So we'll do this. We'll go right here. We put minus 1835. This will now adjust the metrics here, but we'll do the same for the delta and the theta. So if we go here, let's close that. Let's close this. And so ES is bringing in 20, let's call it 24 negative deltas, and 10 negative theta. So 24 and 10. 24. So minus 24 and minus 10. Now, with these included here, these numbers are now corrected. So you see, if we take buying power without, let's delete it, you will see that the buying power is artificially low. So it's not artificial low, it's temporarily lower than it would be if we remove the hedges. So for determining whether we put on another trade or anything like that, we need to be concerned with our normal trades, not the hedges. Hedges are just extra protection that's put on temporary, and I'll show you how I did that, and we'll talk about that as well. Now we currently have 14 trades open, which means if we look at this, our theta is in line, so we are at 0.12 of the account, 0.12% of the account. Theta is 0.12. Okay, that's in line. 22.5, 23% in buying power is used at the moment. And given these metrics, we could have up to 19 trades, and we only have 14 on, and we only opened one trade this week, so we have plenty of room to open another trade. And I know, yeah, government potentially may shut down, but who knows? And you know, that's we don't want to try and predict what's going to happen. We just look at our metrics. Our metrics are fine. If the government shuts down, that's fine. The market might go down. We're going to use our plan, our hedges, our everything that we normally do. So we're not going to concern ourselves with that. So first of all, let's go ahead and do that. Let's go to MES. Let's take a look at a trade here, and we would probably go to 77 days. Let's see what we have there. 9 delta. All right, 9 delta pays us just around 20 and change, so that's fine. So we'll do 2 of those. Let's see if we can get the full value. If not, we'll just quickly we'll just quickly go and replace, make it slightly less advantageous for us. Okay, so 2025, we fill that, and then we go to 2/3, roughly 2/3, or 0.66. You multiply that by 0.66, or just roughly go around 1/3, and 1/3 of actually 2/3 of 77, it's right around 50. So we go to 50, we go to somewhere around 10 delta. Let's go right here, and then we go 300 down, so 36.50, 36.50. So we have a strike right here. We could sell another one. It wouldn't be a big problem, but I really like to keep them separate if at all possible. So let's see what happens here. Oh, 10, we're paying 10.50. So let me see here, 11.50, and if 25, just if we go here, nice. That's better. That's 300 wide, and it's just, then we'll probably have to go up to 10. So let's just try it real quick. And if it doesn't work, we'll just go here, place, up it, and let's see. All right. So that one is now closed. We have a new trade on, and we'll record it a little bit later. Let's talk about the hedge on demand. Hedge on demand is something that I will put on if the market is going down and my deltas are getting out of control, they're getting too high, and it's meant to be put on temporarily. I will make a separate video maybe on this weekend about the exact mechanics, how to put it on. But the idea here is it's a put debit spread with predetermined cost and width, and it's quickly calculated based off of your net lick, of the account net lick. And the idea is to put it on and then take it off if it starts losing money. If it loses around 25% of the original value, we're losing here. I put it on a couple of days ago. Yesterday it was making money. Today is losing money. So right now the whole trade here is losing $87. So once it gets to 25, we can consider taking it off. If the market reverses or continues to go down, and then the plan is to take it off at 600% profit of the initial premium collected. So in this case, we not collected, I'm sorry, paid. So in this case, we were just short of 500 in cost. So times 6, so it would be just around 3,000 that we would be planning to take the trade off if it's showing profit. But we'll think about that later. Right now, that one is on, and that one is bringing in some negative delta and a little bit of buying power relief and some negative theta. So that one is put on only once the market actually starts to go down and our deltas are hurting. And let's take a look at our things here that lost money. So this is the one I was telling you about. We initially made a little bit of money in gold. We made 237. Then let me just make this a little bit smaller so we can see that. All right. So can we see the whole thing now? Yes. Then we had a white put debit spread in bonds, and that one started losing money. We added the call side, but it continued to lose money, so we just closed it for we couldn't close it in time for double the initial premium, so it's like actually a little bit higher than that. But that's done. Those are closed. We tried that, but we're not gonna be doing them anytime soon. We're gonna stick with our 1-to-1s and just try to perfect them as the data comes in, as the market moves around. I get new data, and then I can fine tune this whole strategy. But the whole strategy is not just the trade. It's the trade itself. 1-to-1 trade is one part, main part of the strategy, but there is also the negative delta trades that I bring on, and I will go into them in detail. And those are, you can consider them like a little grind down protection or a grind down profit potential. And then there's hedges on demand. There are hedges on demand that are put on when the market really starts to go down. And then we have some defensive mechanisms if the market continues to go down. We have a plan for that as well. So we'll do, I think I'm due for another new video, updated video about 1-to-1, where I'm going to go over the whole strategy into detail. But for right now, this is good. We're fine, except we got a little bit stung with those commodity trades, but everything else is in line. All right. I'll be doing another update and review. We'll go over the performance for the whole week after Friday close, and I'll make a video, and we'll see how we ended up. Thank you very much. Have a good one. Bye.